We do have John Hilsenrath right now. John, what did the Fed decide?
Okay, so they're keeping rates at zero, but they've sent a couple of notable signals that a rate increase is on the table at their December meeting. They struck a sentence from the statement that said that that financial developments and economic activity overseas could slow the U.S. economy. They took that out. They also pointed concretely for the first time to the next meeting as a time when they'd be making a decision about whether it would be time to raise rates. So they're on hold right now, but the message is keep your eyes open because it could come in December.
So they took out that line, which was one of the key lines really last in September about the overseas developments. I mean, is that a function of, well, the markets have calmed down. We've seen it. The stock market has come back. Oil isn't doing great. But are we now to assume that they're just completely not concerned about that anymore when they seemed very concerned about it?
They are still concerned about it. They say they're still monitoring these developments, but the landscape has changed since they last met. So the stock market has rallied. Spreads on corporate bonds have narrowed a bit. You see 10-year yields coming down. So if you look at broad financial conditions, they have stabilized and improved since the last meeting, and the Fed is acknowledging that. At the same time, the People's Bank of China has taken action. It's reduced interest rates, and the ECB has suggested that it could be launching a new bond buying program. This gives the Fed some comfort that authorities outside of the U.S. are taking steps to bolster global growth, and they're acknowledging, responding to that too.
John, this is Anastasia Amoroso. So it's interesting that we have now taken out these international developments out of the equation, and I agree that the market data now corroborates the story of a rate increase a lot better. But let's talk about the economic assessment. Does the Fed say anything about a slowdown in economic growth that we've likely seen in the third quarter?
Okay, so obviously they do say a few things about the economic growth picture. So they say the economy is expanding moderately. That's the way they've described it before. They point to solid domestic conditions. They say consumer spending and business investment have been increasing at solid rates in recent months. So that's an upgrade of their assessment before. They acknowledge the job market has slowed, but they also point out that some measures of labor utilization, U6, for instance, a broader measure of the unemployment rate, have continued to improve. So, all in all, they seem to be comfortable with the domestic economic outlook and a little less uncomfortable with the global economic outlook.
And, John, this is Spencer Jacob. You wrote about this recently. We're getting almost to the point where the markets feel like the Fed is Lucy with the football, and we're all Charlie Brown, where they keep on sort of hinting that something's going to happen and then pulling it away, and it's just somewhere over the horizon. Now they're saying December. To what extent do you think that this is because they've taken some heat for being unclear? You cited John Taylor's comments to William Dudley. Or just the fact that we've never gone even half as long. I think we've gone 112 months with no increase to rates. That this is just, it's getting to the point where people expect this to last forever, and they're under pressure to take some action, at least.
Well, so they've been undermined this year in part by the economy itself. So they started the year thinking they were going to move by the middle of the year in June, and then we had a really soft first quarter that made them hesitate. Then they started thinking they would be ready to do it in September, and things blew up on them in August in financial markets and in China. It gave them some sense of caution. Frankly, they don't feel like they have to be in a big hurry because inflation is so low right now, so they've been cautious. I think what you're seeing now is they're saying, okay, maybe this is our window. Maybe this is the opportunity that we're going to get to make that first move. And they could pull the ball away if the data don't go in their direction, if we get another couple of soft jobs reports. But, I think what they're trying to do here is wake the markets up a little bit and say, hey, don't be surprised if this happens in December. Market probabilities have been about 1 in 3. We could see them be, closer to 50-50 by the end of the day.
All right, John, we're going to let you go. I know you got to get back and get that story out there. So thanks for everything you've done.
Okay, thanks a lot.